Thank you for joining us. This is the Traders Exclusive Live Trader Showcase. I'm Sherry. Please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. So before we get started, I will share the quick disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time, and past performance is not necessarily indicative of future results. Our first speaker up here today is Mike Hamilton. Mike, thanks so much for joining us.
Good. All right, everybody. So I have been investing for well over 30 years, but I've been day trading since 2005. In that 2005 period into 2007, we saw an incredible commodity boom. That's when oil first hit $100, and that's where I really developed my system in that sort of volatility. In that, to me, oil at that time was fantastic. I could get a daily income in the Euro session, let alone the US session. For a long time since, I've only been trading the US session. I don't even open my charts for the UK, for London. I'm just interested in the volatility that I can get from the US Open, from New York Open. So what I'm going to talk to you about today is I'm going to give you what I think is a really good insight into how and why you should be trading the Dow. Now, if you prefer the NASDAQ, if you prefer the S&Ps or DAX or whatever it is, that's fine. You can apply what I'm about to talk to you about to that. It's a template, it's a system that can be applied to anything from crypto to oil to the indices. But I particularly like the Dow because I just find the characteristics of the Dow and the volume and the volatility on the daily range in the Dow just is much better than, for me, much better than the S&Ps and NASDAQ. But hey, you know, I know some of you might prefer the S&Ps and etc. Right, let's get going. So I'm not going to bombard you with slides. I want to get straight into the charts as soon as I can. But let me just take you through a short journey into what I think you should be doing if you want to be consistent and profitable, and how you can manage the Dow and exploit it to your advantage. So Scalper School is part of Trade Easy Way, and this is obviously the day trading side. The investment side is separate, and I'm going to talk to you about I'm going to focus on just trading the open today. I will talk about gaps and data moves, but I'm going to just teach you a simple lesson, simple example about how you can make the most of the open. And we've had the open nearly 40 minutes ago, so we'll actually take a look at what I could have done today had I been concentrating on that for today's session. By all means, chuck any questions in there. If I don't answer them quickly, I'll answer them at the end. Disclaimer, we've already had one disclaimer. You can just quickly look at mine. Yeah, trading does carry risk, and risk is at the heart of absolutely everything I do, and it's one of the key things that most people don't grasp enough in sufficient importance, and it's not a priority for enough people. I might come up against that, so we'll talk about that a little bit later on. So these are the points I'm going to quickly go through in the time I've got left. I want to get you to think about what you want out of trading. Is that an oversimplistic question? I don't think so. I think too many people put money in an account, start trading without really sitting down and working out what kind of personality they have, what trading style suits you, because day trading can take several different forms. Once you grasp that, once you're clear in your mind what you want out of trading, I think you can then move on, get your head around how the open works, and then be profitable. I'm going to talk about how you can be profitable and the basic rules and how to stay consistent. There we go. Right, okay, so every time I open one of my accounts, my broker tells me that 71% of clients of that brokerage lose money. They fail. 71% of people fail. That's why whenever I do a presentation like this, I always talk about the boring bit a little. I'm not going to bore you today, but I just talk a little bit about risk management. I want to really ram home to you how important risk management should be to you every single day of the week. So, okay, what do you want out of trade? You want to make money. That's why you're here. Everybody wants to make money. Fair enough. But that is not enough. You are not going to succeed if your goal is just to make money. You have to want to be a professional trader. That's the turning point in my journey as a trader, as a professional day trader, that is. You're wanting to be a professional trader and wanting to really get rid of my emotion as much as I possibly can and really stick to a system that can get me in and out of the markets, grab my profit and bank it. So the problem I had in my early days as a day trader, and I think it accounts for most people, is the focus is on your account and not on the trading. When you make that switch onto focusing on your trading and put aside your account, then I think you can start to make money. All right. So the only way I think any of us are going to be profitable is if you trade a system. Discretionary traders make up that 71%. They are the people who do not understand what they want out of markets, concentrate on their account, do all sorts of things when they start to lose money, and they get completely distracted and their head is not in the right place to trade. Let's be honest about this. Trading is not easy if you are not set up for this. So a system means you ignore your own greed and fear. We all have a degree of greed and fear. I mean, that's why we're here. We want to make money. So, but the system gives you the discipline to succeed. As soon as you've got a system, you've got a set of rules, you've got a template, you've got a fixed way of preparing to get in the markets. And if you do that every day, in, day out, then you will be consistent. On the days that you are making a loss, and I haven't had a losing day for quite a while now, a good couple of months, I think. On the days that you make a loss, you just need to get out and stay out. So you've got two options. You can get properly trained, or you can spend a lot of time on YouTube and waste and burn a lot of money, cash in your account. You'll probably burn far more in your account if you're not trained than you would by buying a system and learning a system. So quickly talk about our mindset, about our heads when it comes to day trading, and then we're going to go right into the lesson. I'm not going to mess around. We're going to go straight into how I think or how I trade the Dow Open. Take losses quickly. Get out of there. If you have used a specific setup and it's not worked, get out and stay out for at least a short period. Do not start to try and make your money up. There's a reason why you got stopped out if you've used a system. So stay out, take a short break, and then check back to see if you stuck to your rules. Now, take profits as soon as it hits. Stop looking for runners. It's so easy to make money and then give it back in this game, particularly with leverage. So if you get a target, work out exactly what your target is and take it and bank it. And then stay out. If you've made your day's money, stay out. Don't get greedy. So like I said, if it doesn't work, stop. It could be you need to stop for that day, maybe even that particular week. I mean, certain weeks of the year, particularly in that we've got triple witching coming up on the 21st of this month, when all the contracts switch over. That particular week and that particular day is much more volatile. You're much better potentially reducing the number of trades you take in that week, or not, or just backing off and then wait until we've got the reset in the contracts. Okay. Also, just one quick tip is don't trade every day. You don't need to be in and out of the market every single day. For example, Mondays can be really choppy, where the market's just resetting, pulling back, and then you get to turnaround, what I call turnaround Tuesday, and so on. Final thing, I've not got many slides left now, so I'm going to get on to the charts quite soon. But the final thing I talked about briefly earlier on a few slides back, I talked about a trading style that suits you. Now, I personally don't use a massive amount of leverage and look for small moves. I think that's a mug's game to me, but hey, if you do that and you make a profit every day, then keep doing it. Yeah, some people like really small tick charts and 1 minute charts. That's not how I trade. You can make a profit out of that, but it's not what I do. So just be clear about, are you wanting to get in and out quickly using massive amount of leverage, or are you wanting to take a little bit more time to set up and give the markets more time to work out? What's your style of trading? What I do is I tend to take 2 to 3 trades in the Dow. I like the open move, and then I like to reload. If for any reason either one of those or both don't work, then I stay out. When I reload, and I'll talk about this in a few minutes, when I reload, I quite often take a smaller size. We'll talk about position sizing in a minute. Anyway, be clear about what style of trading suits you. You then need to make sure you're using a time frame that suits that style. It's no good using a 1 minute chart if you're looking for an intraday move. It's no good looking at it's harder work using a 15-minute chart if you're looking to scalp. I mean, you guys know that, but it's worth saying just to make the point about being clear about your trading style. One thing I like to do is, on the end of that last slide, it talks about hedging. One thing I like to do is to quite often have a core position and then trade around it, but I'll talk about that another day. So I mentioned before, if you have a system and you understand it, it's got to be a simple system, otherwise you're not going to be able to use it day in, day out. Trust it, use it every day. Do not start discretionary trading, and certainly do not look for tops and bottoms. One of the most common problems with less experienced traders, should we say, is that everybody's looking for a top and a bottom. I say everybody, a lot are looking for a top and a bottom. So why trade the Dow? Because it's a massive market with a lot of traders and a lot of volume. The higher the volume, the more technical it is, the more likely you are to be able to use a system on top of it. So $12 trillion as per end of last year. Obviously that's considerably more now, or a fair bit more. So like I said, just to reiterate, you can use this on the S&P, you can use this on NASDAQ, you can even use it on cryptos. But I'm going to show you how I use it on the Dow. So we're going to go right into the style, the system. Well, this is the main hub of the system. This is not. I'm not teaching you the system as a whole, obviously, because I haven't got that long. I'm teaching you the real sort of hub of what I trade as New York gets going. So, and this week in particular this is a great week to do this presentation because the Dow has been almost perfect this week for this system. Now, it does not work every single week. So there are variations on this system, and I'll talk about those. I'll touch on those as we get going. But I'm marking off the first 5 minutes of the range, and I'm looking to see which side of that range it breaks. So if it's breaking on the upside, then I'm going to want to buy a pullback. And of course, if it's breaking on the short side, I'm going to want to sell it. And in actual fact, from Monday and Tuesday this week, this system was perfect for both directions. On Monday, we had a classic short setup, and yesterday we had an absolute perfect buy setup. So let's show you what that involved. Let's now come out of these slides for a moment, and let me go to, right, this is yesterday's chart. So I've not updated this for today. Let me just get the pen and run you through this. So this is the opening bar. So the opening range in the Dow yesterday was 70 pips. And it has just, look at the volume on that first bar. The volume is the lifeblood of the markets. So a couple of things I want to talk to you about on just the way this chart is set up. It's not, all I've got is, in fact, I don't normally have an RSI on 5 minutes, just used a different chart. All I'm interested in is volume. If I've got an opening move and I've got the volume to support that move, then I am going to take that move. And so what we've got here is we've got direction. So within 30 minutes, you've got a move that was close to 7. We've got that opening move is 300 pips. Now, if you've been cautious, looking after your account and not taken that move for some reason, perhaps the market moved too fast for you, perhaps you didn't have your account opening time, whatever, or you just felt you weren't sure if that was going to be a powerful move, it doesn't matter, because the higher probability setup in this system is where the market pulls back to the range. So you've got direction, to use a bit of jargon, a fade, and then you've got the move. Okay, 1, 2, 3. Now this is actually very, very similar to what you'd see on a fast-moving day-to-day, where you've got interest rates or jobs or whatever it is. But this is where the patience kicks in. This is where being a professional trader really kicks in, because the last thing I'm going to do, and what less experienced people do, is chase the market, and they'll start buying up here. Oh, I've missed the move. Look at that volume. It's fantastic. I've got to buy this. I've got to buy this. And that's where this system kicks in, because the pullback to the open range is a very 87% probability. Now you've got a couple of options. You could actually trade it off the high of that range, or wait until you get a higher close above the range. I like to take it on the range with a stop just inside the range, and if I get stopped out, I'll back off. I will give it one more try. If, for example, you don't always get beautiful clean days. Let me work out how to. Right, so you can see, I don't know if you can just see that, but it actually didn't come right on top of the range. So 472 is on this chart. It appears it just narrowly above it. Most of the time it will actually sit right in there, and sometimes it actually sits back in the range. So if I take it on top of there with a stop inside the range and it stops me out, I'll stand aside and then look back 15, 30 minutes later to see if it has subsequently closed above the range, and then I will go back in. Otherwise, if it does not go back out of the range, then I'll leave it. If it sits in the range and doesn't do anything, that's a good signal to stay away. And you know what? Sometimes knowing when to stay out of the game, stay out of the markets, is more valuable than knowing when to get in, because you need to protect your account. So on this day, so like I said, if you miss the move, and there's very shallow pullbacks here, you've got 15 minutes where it just absolutely runs. This is the gap. This is the previous day's cash close. So within 15 minutes of the market open, you pretty much close that gap. Breaches the gap and then falls, does a 3-wave pullback. And then 2.5 hours later, it moves, and then what do you got? It runs close to the close. Now, normally on a setup like this, I would say to you, hold it into the close. We do see a deep pullback just before we get to the close. So if you, again, that will hit my targets. I haven't got time to go into what my target was on that particular day, but that would hit my target. And bear in mind, you've got a lot of, if that was 300 pips, move one was 300 pips. Then move, we're not trading the pullback because that's counter trend trade. Well, at least I'm not trading the pullback. I'm suggesting you don't. Move number 2, the trend trade number 2 was, let me think, it's about 330, maybe slightly more. Now, you may not have got all of that, but if you just got, so that's 630 pips between the open and the last 30 minutes prior to the close. Not bad, not bad. So you don't, if you're using mini contracts at $5 a go, that is decent money. $5 times 630. I haven't got my calculator here, so hang on. So if you got every single part of that move on a mini contract, you're looking at $3,150. If you're in the UK and you've got a thread betting account, you don't even have to have that much leverage. You know, £1 a point, and that is, you know, a decent amount of money. Okay, so that is the core of the system. So I told you it's one easy lesson. That's it. Now, let's look at some other examples, and let's talk about other markets and issues to do with the system. No system's perfect. Let me just. So let's look at, how do I get rid of this pen? Can't get. Right. Bear with me a moment. Just need to. Got it. Right. Let's look at Monday. Let me go to my. Right. I had some images open, but for some reason it's closed. Let me go and find them, because Monday was brilliant as well. Let me come out of this. Let me go and grab that image. Right, here we are. 3rd of June. just coming up. Don't know why my PC is so slow. There we go. Drag that across. Right, okay. This is really, really frustrating. I think it's something to do with it. Sometimes the camera messes my... Right. Right, I don't know why. It's moving. I think it's the camera that's messed my graphics up. Right, okay, let me go to the charts because I can't drag the image over. So before I do that, let's look at today's Dow. Right, so that was yesterday's setup. So last night's close. I'll talk about that green line in a minute. Let's talk about this camera is really messing my screen up. I don't know why. Okay, so last night we closed at and I thought right, so had you held into the close, you would have got 700, whereas the high was close to 800. Right, so today we got that's today. So this is, you know what, this is actually a potentially easier day to trade. That's the range set at 819 and 746. On the second bar, breaks the low. So look at there's volume on the downside. So if you've broken the low of the open range, I'm suggesting you short the pullback. So that 780 is just around the midline of that range. And that's where I would suggest you take the trade. So what you've got here is you've got direction, pullback, so, pullback entry, and then the move. All right, so if this is going to be a short day, if we now fade, in other words, retest that range up there at the 745 mark, I will get short with a stop in the middle of that range. Okay, let's see if that I'll leave that up there and see if that works out. Let's go back to Monday, because Monday was a classic as well. So I've got Monday, it must be here. Yeah, here we go. Look at that, we've shorted into Monday's open high to the pip, because I'm just about to mark up Monday's open range here. So Monday's open range was a high of that 746, a low of 657. We break it on the second bar. So we break let me get the pen again. So opening bar, we break the open low, we pull back into the open range and move. Now, if you didn't get that move, look what happens just past the 10 a.m. New York. 30 minutes into the session, we get wave 2. So wave 1, wave 2 is the pullback into the range, just inside of the open range floor. And then in the next 15-20 minutes we sell, and we get a lovely 1, 2, 3 range move down to about 238. Now that low, if we've got time, I'll show you. It's an intra-month support zone. Let me just repeat that. That's an intra-month support zone. So in my preparation for trading this, I'm not focused on just what the open's doing. I'm focused on all the time frames that sit above this. They are all marked out. They are all marked into specific zones, and so that when we get a move, a directional move at the open, I'm ready, set with a target. Okay, so this is why this system's so good, because if you don't have to try and jump in. If this is why you can still make a lot of money without using a lot of leverage. And this is why I don't, another point, coming back to the other points I made, this is why I don't sit there with 1 minute charts. Because quite often with the smaller time frames, you actually miss exactly what's going on with the very small time frames. If you're tuned into small tick charts and 1 minute charts, great. But if you want to sit there more relaxed, more on auto trade mode with your system, ready to take the pullbacks in the direction of the trend of the day, then you'll make money. If you're jumping in and out with smaller time frames, I think most people won't be able to handle it. You'll take too many losses and you'll chip away at your account. With a system like this, where you're not chasing the market, you're looking for the direction, you're waiting for the pullbacks, and then you've got your target set, this is where you'll be profitable. This is where you'll be consistent. And this is what we do in the trading room. This is what I teach and what I show you every day of our trading week, not every day of the week, because we don't trade on Mondays. Right, a couple other things. Let's go to a 30-minute chart. Right, what I've got here on the 30-minute chart is a really, really important zone. Now, what we're all trying to do in trading is follow the crowd. We're trying to trend trade and follow the crowd, because if you follow certain rules and stay the right side of certain zones and levels, your probability of making profit is going to be much, much, much higher. So what I'm showing you here on this 30-minute chart is two things. This green line here is where the market closed at the very end of the previous week. So when the market, this range here that's the first 30 minutes on Monday. So we saw a high of 38,745, a low of 565. We broke it. We broke it after the first hour of the Monday open. So first 30 minutes, we formed this lower close. In the next 30 minutes, we pulled back into resistance. You can see all this resistance up here from this overnight move. So you could take that level for your short and then sell into Friday support. So that's all it's done. I said to you earlier, a few moments ago, one of the Mondays are tradable, but just got to tends to set up a little bit slower sometimes. And all it tends to do is to pull back into the Friday range. And that's exactly what we've done here. Was we get the sell signal, and then we get the target. And then later in the last 2.5 hours, we go back to the break of the open range. So you get a 1-2 wave move, and then you get a third wave actually into the London Open the next day. So on Tuesday, we come into this open range, we hold. Later on the day, it pushes and goes back to the Asian resistance that we found at the Sunday Open. So what these markets are doing, this is the reason why I like the Dow, because this kind of move happens all the time. This is a very, very predictable, a very typical move of the Dow. So if you have your charts marked up to look at the simple things in this market, not the indicators. I haven't got MACD on here. I haven't got all sorts of other stochastics or oscillators. I just got some key points in this market, and from that, yeah, I can pick off all the key major areas of support and resistance. Because at the end of the day, we all know that trading just comes right back down to support and resistance. So all this Dow is doing at the moment, as we wait for ECB rate decision tomorrow and non-farm payroll on Friday, is we're just playing around in Friday's range. That's all we're doing. On Monday, we sell back into Friday's breakout area. We go back to the Sunday open and the Monday highs. We go back to the Monday open lows. How much more predictable do you want to get? It's simple stuff. You don't need a lot of indicators. You just need to be tuned in. And if we go back to the 5-minute open, you can see where the entry for that short came from, because there's just so much congestion up there. That's where the supply was taken care of, and where the demand was not there. Had that closed above there with a positive volume, that's a different story. Then you could have bought this pullback to the Monday high, and then it could have shot off up here. So that's something else to watch for as well. Whatever happens around this range, whatever happens around that open range, is your marker for that day and that week. So what now? There are other aspects. There's a few other parts of the system which I've not talked about. Let me just clear this chart, and I'm not going to show you. I'm just going to talk about them at the moment. So what is not shown here? Let's go back to the 5 minutes, see how it's behaving to the 5 minute. Right, so we're so weak today. We are still not doing it. So we busted through the gap. This blue line was yesterday's close. Got the short signal up here, broke the range, pulled back close to the mid range, and then came down to the demand line lower down. The volume's beginning to pick up, so we could well push back. Okay, so your higher probability, let me go back to the slides a second, because I just want to go through a few points with you. Just wait for that to come back up. There we go. So your high probability, if you are trading the right side of the previous week's close, i.e. that green line I've just talked about, if you are the right side of the previous day's close, At the moment, we are trading the right side of both of these marks, both of these levels. We've sold today and we are under both of those zones. So that, of course, were we to, I talked about if we sat on top of the high of the Monday range, that would have been high probability long had we sat up there, but we're not. We're high probability short right now. Okay, next point. How can I identify a break? And I said to you in one of the earlier slides is, don't constantly look for runners, but there are, if you get a clear break, the simple way to identify if you've got a break on your hands is if we hold the previous, if it's bullish and we have, and I've taken a long, if we are sitting and holding, closing above the previous day's high, then I will hold into the close. And likewise, if we close under the previous day's high, that can be a very good intraday reversal signal if we close under the previous day's high in a bigger time frame. And of course, as with the first point up there, a couple of lines, if you do get a sell signal and you're the right side of the previous week's close and the previous day's close, then it's high probability. Again, I showed you, I marked on my charts the importance of volume. If you are holding the previous day's high for longs and the volume is still consistently higher than average, then the probability of that going to an extension is much, much, much higher. You're looking at 85+% if you've got volume confirming. If you subsequently close higher above the previous day's high and then close under the previous day's high, you're either in a chop mode or that market is about to drop lower. It's rejected the previous day's high. And in the trading room, we talk about how to manage that. If you've got, so that's one way of seeing if you've got an intraday reversal by looking at the previous day's high and the previous day's low. The other ways to identify big moves is if you've got an intraday reversal. Intraday reversals can be where you actually open the market at an extension and the market pulls back into the range. Or you've got, that's where you start the session at an extension, or you fail at the previous day's high, or vice if it's if the market was bearish and it turns bullish, then if you start holding the previous day's low after a big move down to an extension, then you can then I will buy that to the upside. So, but let's just, the most important thing is to keep your trading simple. So if you have broken the open day range in one direction and what I call the golden anchor chart, which I haven't got time to talk about today, but if the golden anchor chart, which is crucial to keeping us the right side of a trade and setting targets, if that anchor chart is telling you you have a reversal on your hands, then that is potentially quite a big day. Intraday reversals are normally quite decent moves, a lot of hits. All right, so the reason for the 4-hour intensive program and the reason why I'm offering you 2 weeks in the trading room is so that you can not only understand the template, understand the system, but you can see it in action for a solid 2 months. And most people stay in the room for much, much longer. But if you, for whatever reason, you decide, if you come on the program, do a couple of months in the room and you want to trade on your own, that's fine. But most people stay in the room long term. And there are variations. There are gap days. Gap days are actually higher probability. I haven't got time to talk about gap days, but the reason why they're higher probability is because you can trade the ambush zones on the pullback. And that most gap days, that makes life very, very much easier. Very simplistic. You just look for a fixed level of support on a bull day, resistance on a sell day, and then you go. Data days, I talked about data days on one particular chart briefly, but basically you're looking for direction, pullback, and move. These days you tend to get 100% pullback rather than a zone pullback, but in the program I'll talk to you about how you can determine whether which is which. The other market I love to day trade, and I've been trading it a lot less recently, is oil. And on another day, I'll talk about just oil because oil is brilliant. You've got that invent range on Wednesday today. In fact, we've had invents 20 minutes ago. And whichever direction the oil moves from that invent day is generally the direction for the rest of that week and into the next week. And as with the open range, if you fade it on the oil, then I would buy that next day. It's quite often a good day to avoid with oil. If you are going to trade oil, it's good to stay away on invent day and then see if you fade the invent range on the next day. So you can take the Dow open range and apply that template to the oil invent range. You can apply it to the, for example, we've got non-farm payroll coming up on Friday. So one thing I would do on Friday is range the non-farm payroll move and see how the market reacts to that at the open. And likewise on Fed day, I suggested to you if you want to have higher probability trading, you stay away on Fed day. Likewise on Fed day, if you range the move on the Fed day and then come back to it the next day, just look to see if we're holding the Fed range or if it's a sell, then if we come back and retest it and drop. Okay, so you can scale this range up and down. If you're a stock trader, you can even scale it to earnings and gaps. But but the hub of we're getting close to my time's up. So the hub of this is the open trading range. Now I just want to go into a little bit more detail about the code of trading that we apply on a bigger time scale. Oh, look, we've hit some, I think probably hit, yeah, we've hit the late session support. We broke up here 2.5 hours into the close, and the Dow has just sat back at that, currently moved back. But like I said, if we come into that range and sell, then that's a good sell point. Right. One final point here. What you're seeing here is, now I said to you, for those of you who've been with me since I started this presentation, I mentioned to you that on Monday, my target for the short was an intra-month support zone. If I just adjust this very quickly, let's go black. Yeah, there we go. Let's thicken that one up as well. Right. So on the Friday, the last day of trading in the Dow, we had this late push up. And I said to you on a couple of points that push up on Friday has formed key markers in the sand for this week's trading. So intra-month, let me just check. Yeah, so we had a low over here on the 1st of May. We shot up on the last day of May. And so the beginning of this week, we sat right on that fib ambush zone. So this is ranged. These are the ratios of last month's trading, and that Monday low was the ambush support from the intra-month trading. So that's why, if you want to, so if you're planning your trades, this is the kind of planning that goes into my trades. All right, now, so in the program, my last 5 minutes, in the program, we go through the core of the system. We go through the fades, in other words, the retests. We go through data moves. We go through all there's several gap setups. Like I said, gap trading is quite often a higher probability than standard open day trading. But we also go, the main template of this system is, I've not shown you that, I've not even hardly talked about it, but the main the golden anchor, as I call it, is absolutely crucial to keeping your probability high in your trade entries. And it also sets targets. Golden anchor we use, that again, you can sit it over any market, you can apply it to any market, oil, crypto, whatever. That template sits over every single day trading we do, and that helps to set your entry and helps to certainly sets the target. So that's core to the program. And so once you go through the program, that then gives you entry into the trading room. The only people allowed in the trading room are the people who've been on the program. So for 2 months, if you subscribe to the program and come into, let me just go and grab it for you. So if you join us on the next program, you will get 4 extra weeks in the trading room. So you'll get 8 weeks in the room, 4 days a week. You also get alerts. Excuse me 1 second. You also have access to the alert room as well. So even though when the trading room closes, the alerts are firing off once or twice a day as well. And so we go through all the rigor of the system. You get to learn it, see it active, working in the trading room, and then you can ask questions in the trading room. And as we wait for the market to set up, take our entries and profits, and exploit the markets.
Thank you for joining us, Mike. Okay, that was Mike Hamilton of Trade the Easy Way.